did do. Okay.
Right.
Anyway. Hi, everybody. This is Dale Pinkard, and I have the pleasure of being able to have a conversation with Hugh Henry. And Hugh, I know you're on tour, and I hope that your security has kept all the groupies away from you. Now you're live from St. Bart's, so appreciate you being with us.
A delight, Dale. Very nice to meet you for the first time. You're right. I've been on tour. I was on tour for 3 months, but I'm back in my spiritual home. I'm kind of trying to plug back into the tropical network and become young again.
Well, that's in our hearts, isn't it, Hugh? So anyway, I want to start off by finding out a little bit about your journey. You know, a lot of people, you know, I've said that there is no secret to trading, that it's hard work and persistence and living through adversity. And if that scares you, do something else. So, you know, a lot of people have to go through. I've stepped on a few landmines in my career, and I'm interested in your beginnings and, you know, how a guy from Scotland ends up in St. Bart's. I noticed you were studying finance at the university, but what or who drew you into becoming a speculator in financial markets?
Well, first and foremost, the journey has a large dose of serendipity. Of course, we like to think that, you know, the harder we try, the luckier we get. Who knows? I'm sure there's an element of truth to that. And you know, it's funny that I actually filled in my university application form a long time ago. And forms, I'm not a form guy. I'm not a detail guy.
I can relate.
You know, you would not write in pencil the name of the course. You would write a 15-digit credit card number, if you will. And I put the wrong digits in.
Who paid for your education?
Oh, the government and the taxpayers paid for it. Gloriously.
Good.
But you know, I was meant to. This was 1986, and I was meant to do this really hot new subject, and I can't emphasize enough. It was so cutting edge. It was called Technology and Business Studies. And you would learn computer coding and language at the same time as you would take a kind of economics business degree. I mean, 1986.
Yeah, that's early.
It's 30 years before the NASDAQ bubble. So, but I didn't do that. I got a digit wrong and I got filled on accountancy. So whatever, you know. But as I completed my honors year, I was conducting a course called Market-Based Accounting Research, and it called upon me to look at charts. It called upon
there you go.
Yeah, a data stream. No one's ever heard of data stream these days, but you know, an old wonky kind of black screen with some red, some green dilated pupils, if you will. And I thought, wow, I had no vices. I didn't drink, etc. Social engagements, really, was I voyeuristic? I don't know, but I was keenly attentive to how people engage with each other. And so this seemed another form of observation, and I was hooked. And like I say, serendipity took me from Glasgow to Edinburgh. It seems a very short journey, but culturally it's a million miles. And I worked for a fantastically rigorous fundamentalist company as an investment analyst and fund manager. And then 8 years or so later, talking of mentors and whatever, I was serendipitous again, and I met one of Europe's first hedge fund managers who was running a pirate ship. And he saw the troublemaker in me.
Yeah, he said you were one of us, that you too were a pirate.
Yeah, he did.
Okay,
I think he was right. I don't know how many pirates there are left. I mean, you know, the pirates of folklore, of course, were paid by Her Majesty's Treasury to actually join forces with the Royal Navy, and they would have their slate written clean, if you will. So here I am, the Caribbean, but you know, I'm still trying to be swashbuckling.
What was the main thing that Crispin O'Day taught you that may have been a breakthrough, a paradigm shift for you? Because that's really when you came into your own and started managing billions. So what did you learn from Crispin?
Oh, yeah.
Besides misbehaving, I read
And
about that.
yeah,
Misbehavior.
but that's it, is curiosity, playfulness, and misbehavior. That my 8 years in Edinburgh, Scotland, had been woefully underappreciated and led me into conflict that to this day I cannot explain why, but I get feelings with regard to things that are set to happen. But
You're a maverick.
yeah, I get I'm maverick. You know,
Yeah. Yeah. I mean, mavericks usually don't fit into corporate structures.
yeah. So to your point, Crispin O'Day taught me the tools of navigating the matrix, yeah, of unplugging your mind, but and making the most of it. And in simple terms, he presented to me charts. You know,
Yeah, there we go.
he'd had a terribly difficult time 8 years previously, where all the great minds have fantastic ideas, but ideas need to be disciplined, and they need to be disciplined by the legitimacy of a price trend. And that's
Okay.
what I gained from Crispin O'Day. I buy things going up without prejudice, and I sell things going down without prejudice.
I'd say one of the major failings of a contrarian is they see things before the market recognizes them, and they're normally early. So to wait for confirmation on an idea can save you a lot of pain. Do you find yourself still being early on things, Hugh?
Yeah, I mean, I'm out there with the call on the TLT, the kind of
Yeah,
long treasury ETF.
yeah, I'm
Uh,
going to bring that up.
and I I've been following it. It wasn't until the start of this year that I really kind of stepped forward. And so, I've been pushing water up a hill for the last, 4 or 5 months.
Yeah, I'm showing a weekly of the TLT, and this was the worst bear market in my career when TLT was 170, Hugh. Those were the lowest rates since the Civil War, the first one in the US.
Yeah.
And, you're going back to, the 1830s, and Europe, even worse with negative rates.
Mhm.
Can you imagine what their books look like after the move in rates that they even have to pay to hold on to a losing position? Um, so you're definitely buying something that's been hammered. And why don't you tell people why you like
In-
bonds? Is it
Indeed.
a,
Well,
go ahead.
let me tell you several things, because um, we talked about timing. Let's talk about timing. Let's talk about application, and then let's talk about justification. I've really only been willing to risk my reputation on this position since the beginning of the year. And as
Okay.
you can see, it has been
Sideways.
in a sideways oscillation.
Right.
And even then, my advocacy has been for an asymmetric call option, because I can't justify actually having a Delta One position. I can't. If we had $1 million investment portfolio, a position like this and its sensitivity, price sensitivity, you really have to be talking about having $600,000, $700,000 in that position. I am not advocating that presently, because the chart is more than dubious. Dubious.
Okay. In
Okay.
fact, I thought 2 weeks ago, Hugh, we had a breakdown out of this ascending triangle, which is supposed to be bullish. if you break out over 109, we're on our way up. And today, actually, just a little short-term stuff. When you look at today's high, it came right off that triangle breakdown today.
Indeed. Yeah.
Okay.
The
So
forces can be invisible, but like the wind breaching the branches of the tree, it reveals itself. So, this is presently a precarious position that has no respect for my opinion. Okay, so that's
or Jeff Gunledge, right?
Yeah, indeed.
Yeah,
Can you put it on a monthly
sure,
candle basis?
sure. And I wanted to ask you, since it looks like the debt ceiling is a layup now, that they're going to have to fill up the treasury, and there's going to be a lot of notes and bonds for sale so that they could refurbish their treasure chest. Are you worried about supply? And I'm worried about who's going to buy them with all the supply coming into the market.
Dale, look into my eyes. Look at me. Look at me
Okay.
serenely and listen attentively.
Okay.
Never worry about supply, not when it's government supply. There,
Interesting.
there is an old dead French economist with a rule, Say's law. Supply creates its own demand. The circumstances which may lead the government to require to issue lots of government securities, the circumstances which lead investors to prefer riskless securities. Even in the stock market, people, the stock market is a mirage. The S&P is up, whatever it is, 12 or so % on the year, and 115% of those gains are coming from 7 stocks. And those 7 stocks are deemed to be riskless in terms of
the Nifty 50 was.
So the wise people know that there's a profoundly serious global recession. I think it's upon us. I think adjustments in the future to the economic series will reveal that. I think it's revealed in that Nifty 50 analogy that people want to own anything that is not exposed.
They think these are bonds.
They do. No, they do.
Right? I mean, they're not bonds. They're stocks, but they believe they're, that's their flight to quality nowadays, Hugh.
It is. So I would say that for the most part, the S&P and those TLTs of mine have been oscillating sideways for the last 9 months, and we're waiting for a resolution. So like I say, my favorite position is in the bonds. I'm owning kind of at the money call options. My expiry is January 25. And so again, for the folks listening in, don't be a hero on your strike prices. If you're more than 10% away from, more than likely you're enriching the people who sell these options. And believe me,
exactly. The house usually wins. And gosh, that's an awful lot of time to buy. And I even saw a tweet from you that you were talking about the at the money Apple 2025 puts. I know it probably has something to do with your view on China, but they're they don't want Micron there anymore, and it's security over money there.
With a lot of people, it's one thing to jaw and to talk, and there's not a day goes by without us reading this miserable deterioration in the relationship between America and China, and there's not a day that goes past without some minor or otherwise military kind of miss. But if it were to, God forbid, and the probability of a China invasion of Taiwan 2-3 years ago was incredibly small probabilistically, but we live in a world today where is it 5%? Is that a 1 in 20 occurrence? And I think we're pushing that way. And my simple point is, where's the hedge in a portfolio? And so people think in a linear manner, and they think of the most obvious. And so they say, "Oh, I want to have a put option on, the Taiwan semiconductors." But when it's obvious, again, Mr. Option Writer is pricing it, and he's just waiting for you to buy it. So you have to think, a little bit more loosely. Now, the Apple connection is that until it sorts itself out, it is dependent on the manufacturer of iPhones being supplied out of China. That will change.
Yeah, and here we are almost at new all-time highs here on the monthly. And could that be why Tim Cook was paying homage to Modi, because he's worried about that too, as far as shifting his manufacturing base? Couldn't China one day say, don't buy any more? Couldn't Xi say, don't buy any more Apple phones? They produce their own phones, and take a shot at an American icon, not just a Micron.
Well, we're specifically addressing the notion if there was to be an incident in the Straits of Taiwan. But like I said, normally I wouldn't wish to discuss, but I have to say, probabilistically, I think I'm at 5%, 1 in 20 event.
What about what's happening in Ukraine? And wouldn't the market's not pricing in any geo risk if the Ukrainians are successful with this counteroffensive? Could Putin get desperate enough to use tactical nukes? There is no geo risk priced into anything in our markets right now.
Yeah, that's not unusual. There was no geo risk in 1914 priced into markets, and markets had to be suspended. But God forbid such events happen. The market will catch up, but there's anyway. So
let's talk about man-made mistakes. I once asked Trader Vic, do you think the Fed is making a policy error? And he said, Dale, the Fed always makes policy errors. So I know you've been on different interviews and talking about that there might be a remedy for this flight capital, that the mercury is rising for banks to possibly, or the government, make a rule to limit the amount of cash you could withdraw from your accounts. You still feel that way?
Yeah, I mean, we've had bankruptcies, insolvency already, and we've yet to reach the credit deterioration. We've had bankruptcies without bad credits in the system. You had Credit Suisse, boom, disappeared. It had nothing to do with Silicon Valley Bank. It was
owning bonds from the top.
It was massively in excess of all the regulatory requirements and how they deem and define, a solvent institution. The riddles that they impose upon us. So, the Fed doesn't seem to be in any hurry to cut interest rates.
Are they good? What are they going to do in June, Hugh? What's your gut tell you?
I will not give them the respect of my contempt. Believe me, I will be the last one to know, and I will be the last one to care. The die is cast. The die is cast. Yeah, they have brought on another profoundly serious economic global recession. It is with us today. That is just a fact. And then, of course, that's why my preference is for those bonds, and that's why I've got an initial position in call options. And if that bond position begins to work in my favor, if you bring the chart up again, you'll see if we actually escape that pendant.
That's at 109.
Yeah, if I was saying 110. If we breach 110, I'll be going delta one long. I'll buy as much as I can. I'm in no hurry. I'm a coward. I don't buy lows, I buy highs. And if I'm selling, I sell lows, I don't sell highs. If you bring your silver back again, I was looking at your silver chart. Silver, oh my God, it's so boring. Wake me up when it's through 2026. It's just noisy just now.
Okay. I have heard that you do own some of the miners, maybe not in a huge way. And actually, when I first noticed you, Hugh, someone was asking you about gold, and you said it wasn't to the right enough, and it was in a void. And we had a pretty good break, about $100 break from there. You still feel like there could be some more downside, because I know your other big view is bullish the dollar,
Yeah, yeah.
right?
Well, yeah, it's happens.
There it is.
The dollar, does the dollar weak? I don't understand. I don't recognize that monthly chart. Oh,
This is a daily, and we had this rally from par 50, and we peaked this week, and I'm looking to reload maybe around 102
yeah,
on a pullback here.
I see that. I see that. So you asked about gold. It's not quite Bitcoin where the boys and girls are beating their chests, as again, people got to understand these markets, they do not know that you love them. And in fact, even
they're
if
mean. Mr. Mark is a mean guy, isn't he, Hugh?
He's a really mean guy. He wants the worst for you. He's toying with you. He's toying with you. And when you walk in, they're going, "Oh, Bitcoin this or gold that." It's like, wake up, people. But so
you have to be tactical nowadays, don't you? Really, more than ever, with
indeed.
the kind of swings we're getting, it's harder to be a position guy, and it's easier to be a swing trader type.
I don't know. I don't like multiplying the number of decisions I've got to make in the
okay. There's your Bitcoin chart. So moving sideways again, everything's sideways, right?
But show a bit more data, show a bit longer, 3 years, 5 years, whatever.
You want my telescope, the Hubble?
Bring it on.
Out there's the monthly.
There you go. Okay, so because we're talking about gold, right? I prefer.
This is Bitcoin.
I know I prefer Bitcoin over gold just now because
right.
It's fallen from $70,000 to $27,000. Okay,
right.
And the market capitalization of Bitcoin is about $0.5 trillion. And for gold, it's deservedly, but it's 12 trillion. It's 24 times greater in scale than Bitcoin. And the allocation to these instruments would be found in an alternative bucket within the permanent portfolio. And that bucket's $100 trillion. That bucket has index-linked treasury tips. It has commercial property. It has private equity. And I'm just saying to myself, why couldn't Bitcoin be a 2 trillion allocation, in which case it goes up fourfold? So for me, risk adjusted, I've had mean reversion in an asset class. And
it's hard to value, though, isn't that why you say, I could own it here, and if it dropped to 10,000, I'd probably buy more?
Well, I mean, on the 10,000, I've said, the wides, looking at it today and trying to make a decision tree node, it's 10,000 plays 100,000. The probability that it hits 10,000, I would attribute as being quite higher, certainly if you shorten the time period. Could it hit 100,000 in the next 2-3 years? Yeah, sure it could. Is there any other asset class that could go up 4x? There's none. So
is there any other asset class, Hugh, that has better portability?
No,
there is nothing. I mean, you would get a hernia carrying your silver coin bags around.
Yeah, of course.
You're probably in better shape than me because you surf, but it's really not portable. In Europe, they use diamonds to get across borders.
Diamond, yeah. But you were saying, how do you value Bitcoin? I mean, how do you value gold? How do you value diamonds? Yeah, these
charts.
Are charts indeed, and they're intrinsically works of art, and people will pay what they will. For me, the gold, the Bitcoin, the silver, they're kind of when the world becomes truly chaotic. Presently, there's still enough investors, and they say, in the Fed we trust. And gold or Bitcoin is one of those instruments where you give the finger to the Fed. You say, you guys are You know, I'm checking out of your system, you know, wake
Right.
me up when you restore order to the crazy house. So that's why we're talking about those instruments. So for
Okay.
me, I still get a lot of pushback on the Bitcoin. It's emotional. There's a lot of justifiable pushback on the treasuries because inflation is still fresh in the mind.
Well, that should make you feel more comfortable than if you had a lot of agreement,
Indeed. I don't know if
right?
anything makes me feel comfortable. I go to sleep on a bed of nails, but you know.
Yeah. Well, just getting back to the dollar and maybe a little bit of China, this is your preferred way to trade the dollar, where
Yeah.
you're long the dollar and short yuan.
I'm
So,
long the Dixie and I'm short red cabbage.
okay, got it. All right. So, Hugh, it's talking to a pirate, it's my first time, and you know, you call your work acid capitalism, and I'll tell you, some days it looks like a bad trip to me, like someone spiked my coffee with
Mm.
something. So interesting that the bond call and anything you want to wrap it with. You said you like uranium as well. Do you think that's the move for energy instead of green,
Yeah,
or it is green?
commodity equities, from uranium to the ags to
Yeah,
the.
the eggs.
I mean, you know, they've really been trousered. I mean, they've
Yeah, they
really
have.
beaten down.
Yeah,
They're getting to
corn and
they're getting to
and
points where you've got to kind of start following them more closely.
yeah, and there is a super El Nino, Grande El Nino in the Pacific this year that could change weather patterns. So there's a monthly on corn.
Yeah. Do you have the CF industries chart, CF US? Do you have that?
Let me
That's one
pull
of
it.
the big cap US equity, agricultural equities. And they,
There it is.
let's look at because
Okay, so it's kind of like what a ConAgra used to be, or
yeah, better. I would say better, but yeah. Um,
oh, there you go. Nice
you know, very
pullback,
nice,
50%.
very nice trend. And you see back in early 2022, we broke that 2015 high.
Yeah,
And that was just, to my mind, Party's just getting going. Can you show us more data on that?
that was actually the invasion when people were worried about wheat and Ukraine getting it out. There you go. That's as far I go to
There you go. Okay.
2006.
So we've regressed back to the breakout level. You know that's kind of norm. I would expect maybe on the wides you could trade 50, but I can see that thing making new highs. You know, I'm sure you work on that basis. The low was 20 between the two
Right,
highs. The high was
right.
70 at 50. We went to
Yeah.
120. We did trade it, but yeah, I'd be curious there. I'm having fun. I'm kind of trying to say to people, don't bring your prejudice into the trend. Okay, so bring up NVIDIA, NVDA.
I have it somewhere here.
Yeah, I bet
The
you have.
video, yeah. So uh, a blow off. Does it remind you of in any way of 2000 and .coms with AI? Do you think it's going to change? It's going to change the world, but as far as valuations, here's NVIDIA.
Yeah, and let's go. I don't know. Let's do
Shorter
one.
term?
Yeah, shorter term.
Okay, let's do a weekly. That'll show the blow off. There you go.
Um, I I you said the year 2000. I think it's still early 1999. Uh,
Okay.
I can conceive of this coming back to again 320 or so, but actually I conceive of it going to 500, 550.
Okay.
You know, this looks as if it's on a par with you know, the WWW.
Could this happen, Hugh? If we do get one more flush in the S&P to challenge last October's lows, or is that off the table? Last October's lows for a while.
Um, well, we'll see. I think lows will be. You know, I think there's another 20% off the S&P from here as the recession
Okay.
accepted.
Okay. All right.
You know, the legend Stan Druckenmiller, and he owns
Yeah.
this, and he's saying You know, even in the worst bear markets in the 70s and the 80s, there were always stocks that were just independent to now. And that feels like it's one of those areas. I mean, it's proportional. It's gone from 120 to 396. But if it can do that, people, if it can trade at 26 times revenue, it can trade at 36 times revenue.
Yeah. The rubber band could stretch way further than we think.
All that history teaches us is that you should be long things that go up. And sometimes prudently, you've got to consider your risk sizing and some diversification. But don't bring prejudice into the chart room.
Okay, so if you want a paradigm shift and learn to think like Hugh is, this is where you go. So Hugh has a little thing to keep retail people, keep an open mind. It'll keep your account open. Believe in that, Hugh? So you go right here and he does live chat. You have a private community. I'm joining.
Fantastic.
So anyway, I really had a great time going over charts and technicals with you, Hugh. And for a pirate, you're a very giving guy. You opened up the treasure chest for all of our viewers. I really appreciate it.
Yeah, well, hey, listen, thank you very much for having me on. And I could talk charts all day.
All right. Well, we got some great looks and a lot of things to process from you, Hugh. I'm a fan. I'm rooting for you.
Thank you very much, Dale.
Hugh Henry, everybody. Follow him on Twitter at Henry_Hugh and check out his site on Patreon. Good hunting, Hugh.
Thanks, Dale.
All right, buddy. You're now my trading warrior brother. Can't turn that away.